So hi guys, we're now down to the chapter 6, Disbursement of the Government Accounting Manual, Volume 1. I am assigned to you to introduce to you this chapter and to give some overview of what my group mates will be reporting. Okay, so many in the social media or in the news, as we can observe, are complaining where did the government funds go or what happens to the taxes that they are paying and demanding that they should be receiving the benefits more than what they do. And then there are some who are just typically complaining without knowing the real scenario or without a picture of how things really been going. But as we as financial enthusiasts and as future accountants to defend public funds or to defend funds who work with facts and not and work with professional judgments and not just mere opinions, this chapter would be our guide. Yeah, this is Christian Wolf of the movie The Accountants, by the way. The type of accountant who rarely exists because he's physically strong, he could counter bullets at the speed of light, and he is healthy. Well, next up, Section 1, Scope of this chapter. This chapter covers the rules and regulations to be followed in the disbursement of public funds, the monitoring, receipt, and utilization of NCA or NTA, preparation and processing of dividends or payroll, preparation and issue of checks, payment by cash, granting, utilization and liquidation or replenishment of cash advances, payment through ADA, remittance of taxes withheld through TRA, availment of foreign loans, through suppliers, credit or constructive cash, and payment of operating requirements on FSPs through CDC. Section 2, this is on the definition of terms for this chapter. Now, for the purposes of this manual, the terms used shall be construed to mean as follows. But I don't think I have enough time to discuss the definition because it's quite long, so I will just introduce some. But don't worry, my group mates will discuss to you these terms. We will encounter these terms along the way. My group mates will discuss it to you. We have the accounts payable, the advance to debit account, agency, authorized card holder, billing entity, credit card company, commercial check, direct payment system, disbursement, expanded modified direct payment scheme, implementing agency, and interagency transfer fund. We have the accounts payable, which refers to valid and legal obligations of NGAs for which goods, services, projects have been delivered, rendered, completed, and accepted regardless of the year when these obligations were incurred. Now, again, don't worry. These terms will be discussed by my group mates in their assigned topics to be discussed. So I think I will end my part here.
In continuation of the definition of terms, we have the letter of introduction. It is a letter addressed to the MDS GSP issued by the national government agency to its creditors. Merchants. It is simply the sellers, suppliers under the cashless purchase card system. Modified Disbursement System check. It is the check issued by the government agencies chargeable against the account of the Treasurer of the Philippines. Next, we have the Modified Disbursement System, Government Servicing Banks. It refers to authorized government servicing banks to which DBM issues the NCAs for crediting to the MDS sub-accounts of NGAs. So what I mean by these authorized government servicing banks are examples such as Land Bank of the Philippines, Development Bank of the Philippines, and the Philippine Veterans Bank. Petty Cash Fund refers to the amount granted to duly designated Petty Cash Fund custodian for payment of authorized petty or miscellaneous expenses. That is why checks is very inconvenient for small expenses. Program Administrator refers to the designated by the head of the agency who are tasked to implement and administer the cashless purchase card system. Project. It is the authorized activities which an agency shall prosecute or implement in favor or in behalf of another agency. So example of these authorized activities are construction works, research or training programs, or computer engagements. Purchase limit. There are three kinds of purchase limits. We have the cardholder monthly purchase limit, cardholder single purchase limit, and the maximum purchase card limit. So for the cardholder monthly purchase limit, it is the total value of purchases that a cardholder can make in 1 month. while for the cardholder single purchase limit, it is the allowed value for each cardholder for each transaction. Next is the maximum purchase card limit. It is the maximum amount that the unit or office is authorized to utilize. Regular cash advance. It is the amount granted to accountable officers for the payment of expenses. So example of these accountable officers, we have the cashiers, disbursing officers, or paymasters. Next, we have the steering committee. It is the advisory committee composed of the representatives from D&D and the DBM, which shall provide the guidance on key issues such as policy and objectives, control, procedures, individual, card limits, and etc. Special cash advance. It is the amount granted on explicit authority of the head of the agency only to duly designate disbursing officers or employees for other legally authorized purposes. So unlike the regular cash advance, it is only granted for accountable officers, but the special cash advance is granted to the head of the agency with the same legal authorized purposes, like for example, payment of current operating expenditures like salaries, wages, and allowances. Source agency. It is an agency to which the allotment has been originally released and in whose behalf or benefit the project will be prosecuted or implemented. Tax remittance advice. It refers to serially numbered document prescribed by the DBM that should be used by the NGAs in the remittances of withheld taxes on funds coming from DBM. And the last one is the withdrawal application. It is a written request from the borrower to the development partner to pay funds against the borrower's loan account.
Section 3. Notice of Cash Allocation or NCA. This shall be the authority of an agency to pay operating expenses, purchases of supplies and materials, acquisition of PPE, accounts payable, and other authorized disbursements through the issue of MDS checks, authority to debit account, or other modes of disbursements. No MDS check or ADA shall be issued without the covering NCA. Since the NCA received shall be the authority of the agency to cover their cash requirements, meaning it is a disbursement ceiling or limit of the government agency, the total MDS checks or ADA issued by the agency shall not exceed the total NCA received. However, to maximize the available NCAs of the agency, a common fund system policy shall be adopted whereby cash allocation balances of agencies under the regular MDS account may be used to cover the current year's accounts payable payment, and of course, this is after satisfying the regular operating requirements as reflected in the monthly cash program. NCA issued and credited to the special MDS accounts of agencies for payment of retirement gratuity or terminal leave benefits, as well as prior year's accounts payable, shall be valid within the period prescribed under existing rules and regulations. The NCA shall be monitored through the maintenance of the RANCA, or Registry of Allotments and Notice of Cash Allocations, by the Accounting Division or Unit. NCA issued and credited to the special MDS accounts for trust to cover payments of authorized claims shall be valid, again within the period prescribed under existing regulations. For NCA issued for foreign assisted projects such as grants from foreign country with a separate MDS account maintained by the spending agency with government servicing banks, MDS check or ADA shall be issued only for specific purpose until full implementation of the project, subject to pertinent DBM issuances prescribing the validity of the NCA. Section 4 is about Notice of Transfer Allocation or NTA. This shall be the authority of the regional and operating units to pay their operating expenses, purchases of supplies and materials, acquisition of PPE, accounts payable, and other authorized disbursements through the issue of MDS checks, ADA, or other modes of disbursements. No MDS check or ADA shall be issued by the regional offices or operating units without a covering NTA. Same with the NCA, the total MDS checks issued shall not exceed the total NTA received. NTA issued and credited to the regular MDS accounts of regional offices or operating units for the regular operations which are programmed for a specific month shall be valid within the period prescribed under existing rules and regulations. Again, to maximize the available NTAs of the agency, the Common Fund System policy shall also be adopted. NTA issued by the central office and credited to the special MDS accounts of regional offices or operating units for payment of retirement, gratuity, or terminal leave benefits, as well as prior year's accounts payable, shall be valid within the period prescribed under existing rules and regulations. For the NTA, it shall be monitored through the maintenance of the RANTA or the Registry of Allotment and Notice of Transfer of Allocation by the regional offices or the operating units. For Section 5, recording of the receipt of NCA or NTA, the central office, regional offices, or operating units shall record in the RANCA or RANTA all NCAs or NTAs received and amount disbursed. This is to control and monitor unfunded allotments and the balance of disbursement authorities.
Section 7 is all about modes of disbursement. There are 5 different modes of disbursement, which are checks, cash, advice to debit the account, tax remittance advice working fund, and direct payment method. Section 8, disbursement by check. Checks shall be drawn only on duly approved disbursement voucher or payroll. These shall be used for payment of regular expenses which cannot be conveniently nor practically paid using the advice to debit the account or not authorized to be paid using the petty cash fund or advances for operating expenses. Checks issued shall be reported and recorded in the books of account whether released or unreleased to the respective payees. There are 2 types of checks being issued by government agencies: the Modified Disbursement System checks and the commercial checks. The Modified Disbursement System checks are checks issued by government agencies chargeable against the account of the Treasurer of the Philippines, which are maintained with a different Modified Disbursement System government servicing banks, while commercial checks are checks issued by the national government agencies chargeable against the agency checking account with government servicing banks. This shall be covered by the income receipt authorized to be deposited to the authorized government depository banks.
Disbursements by the government can be made through checks, cash, direct payment method, and any other means as discussed by the previous reporter. For my part, I am going to show accounting entries for disbursements made by the government by means of check. One usual and common accounting entries for disbursement transactions is to recognize an expense account in a debit portion and a credit of an asset account. First disbursement transaction is the payment of the utility bills. When the government agency issues a check for the payment of bills from utility companies with these amounts, for example, entries would be a debit of an appropriate expenses accounts and a credit of cash, modified disbursement system, regular. The modified disbursement system, as discussed by the previous reporter, is a type of check other than commercial checks issued by the government agencies chargeable against the account of the Treasurer of the Philippines. The second transaction is when the government agency grants cash advance for travel to employees. The journal entry to record this check disbursement transaction is a debit to advances to officers and employees and a credit to cash modified disbursement system, regular. Next is the advance payment to procurement service. So when check is issued for advance payment to procurement service for the purchase of office equipment, the journal entry is a debit to due from national government agency and a credit to cash modified disbursement system, regular. Establishment of a petty cash fund. The journal entry for the establishment of a petty cash fund to cover petty expenses is a debit to a petty cash fund account and a credit to cash modified disbursement system, regular. Replenishment of the petty cash fund. If the expenses charged to the petty cash fund are these, the journal entry to recognize replenishment of the petty cash fund based on the report on paid petty cash vouchers is a debit to an appropriate expenses accounts and a credit to cash modified disbursement system, regular. Remittances of government share. When checks are issued to GSIS, Pag-ibig, PhilHealth for the remittances of government share with these amounts, for example, The journal entry is a debit to an appropriate account and a credit to cash modified disbursement system regular. Remittances of salary deductions. To recognize remittances of salary deductions based on individual checks issued to the following, with these amounts, the journal entry is a debit due to GSIS, due to Pag-ibig, due to PhilHealth, other payables, and a credit to cash modified disbursement system regular.
Section 14 for the disbursement talks about disbursements by cash. Cash disbursements constitute payments out of cash advances which are granted to regular and special disbursing officers for personal services, petty expenses, and maintenance and other operating expenses for field operating requirements. So all cash payments shall be covered by duly approved disbursement vouchers, payrolls, or petty cash vouchers. The cash advances may be granted to the cashiers, disbursing officers, or officials and employees to cover the following, which includes the salaries and wages, travel, special time-bound undertakings, and petty operating expenses. So in granting and liquidation of cash advances, it shall be governed by the following existing Commission on Audit rules and regulations and other pertinent issuances. So we need to remember that no cash advance shall be given unless it is for a legally authorized specific purpose. A cash advance shall be reported on and liquidated as soon as the purpose for which it was given has been served. Then, no additional cash advance shall be allowed to any official or employee unless the previous cash advance to him or to her is first settled or liquidated or a proper accounting has been made. Except for cash advance for official travel, no officer or employee shall be granted cash advance unless he or she is properly bonded in accordance with the existing laws or regulations. The amount of cash advance which may be granted shall not exceed the maximum cash accountability which is covered by his or her bond. Only permanently appointed officials shall be designated as disbursing officers, and only duly appointed or designated disbursing officer may perform disbursing functions. Officers and employees who are given cash advances for official travel, they need not be designated as disbursing officers. The transfer of cash advance from one accountable officer to another is not allowed and shall not be allowed. Then lastly, the cash advance shall be used solely for a specific legal purpose for which it was granted. Under no circumstance shall it be used for encashment of checks or for liquidation of a previous cash advance. Let's now move on to Section 15, Cash Advance for Payroll. Advances for payroll shall be granted to the regular disbursing officers for the payment of salaries, wages, allowances, and other personal benefits of officials and employees. The advances for payroll shall not be used for the encashment of checks or for liquidation of previous or other types of cash advances. It shall be equal to the net amount of the processed payroll corresponding to the pay period. And then, the liquidation of the advances shall be made within 5 days after the end of the pay period. Any unclaimed salaries or allowances shall be refunded and issued official receipt to close the account.
Hi everyone, I'm Divine and I'm going to discuss section 30, 34, and 35. So section 30, notes to financial statements. Notes to financial statements are integral parts of the financial statements. These notes will help to clarify the items presented in the financial statements. It also provides a narrative description of items in the financial statements and information about them that do not qualify for recognition. Each item on the face of each financial statements balance sheet, for example, shall be cross-referenced the related information in the notes. For example, in the total asset of the balance sheet of Shell Petroleum Corporation, we have the total comparative amount in which in the notes to financial statement of the corporation it was stated in note 2, which is the note to cash, the explanations on figures found in the balance sheet under the cash item, in which in this case the account consists of cash in universal and commercial banks earning interest at the prevailing rate. Next is Section 34, which is the adjusting events after the reporting date. An adjusting event is an event after the reporting period that provides further evidence of conditions that existed at the end of reporting period. The entity should adjust the amounts recognized in its financial statements to reflect those adjusting events after the reporting period. Let's say, for example, there is a settlement after the reporting date of a court case that confirms that the entity had a present obligation at the reporting date. Next is there is a receipt of information after the reporting date indicating that an asset was impaired at the reporting date. For example, is the bankruptcy of a debtor that occurs after the reporting date. So in that case, the entity needs to adjust the carrying amount of the accounts receivable. And last example is there is a discovery of fraud and errors that show the financial statements were incorrect. In continuation for Section 34, we have Section 35, which is the disclosures of events after the reporting date. The required disclosures for events after the reporting date are as follows. First is an entity shall disclose the date when the financial statements were authorized for issue and who gave that authorization. If another body has the power to amend the financial statements after issuance, then the entity shall disclose that fact. Second one is if an entity receives information after the reporting date but before the financial statements are authorized for issue about conditions that existed at the reporting date, the entity shall update disclosures that relate to these conditions in light of the new information. The third one is if non-adjusting events after the reporting date are material, non-disclosures could influence the economic decisions of users taken on the basis of the financial statements. So accordingly, the entity shall disclose the following for each material category of non-adjusting events after the reporting date. First is we have the nature of the event. The second one is an estimate of its financial effect or a statement that such an estimate cannot be made. The following, among others, are examples of non-adjusting events after the reporting date which requires disclosure. First is we have an acquisition or disposal of a major controlled entity, and announcement of a plan to discontinue an operation or a major program. Third is major purchases and disposal of asset, and the destruction of a major building by a fire after the reporting date.
Section 39 is an illustrative accounting entries for disbursement out of petty cash. Assumptions. The estimated expenses are the following. Traveling expenses 10,000 pesos, office supply expenses 8,000, postage and carrier expenses 5,000, fuel, oil, and lubricant expenses 2,000, other MOOE 5,000 with a total of 30,000 pesos. For the establishment of petty cash fund, the entry should be debit petty cash 30,000 pesos, credit cash modified disbursement system regular 30,000 pesos, and an explanation to record the establishment of petty cash fund. For the replenishment of petty cash based on the disbursement voucher or PPCVS and SDS, we must debit all the expenses, so the entry should be debit traveling expense local 10,000 pesos, office supply expenses 8,000, fuel, oil, and lubricants 2,000, postage and carrier expenses 5,000, maintenance and operating expenses 4,800, and credit cash modified disbursement system regular 29,800, and an explanation to record the replenishment of petty cash based on the disbursement voucher or PPCVS and SDS. Return of unused petty cash fund upon retirement, resignation, separation, and termination of the petty cash custodian. The entry should be debit cash collecting officer 200 pesos, credit petty cash 200 pesos, to record based on the OR. How about the unreplenished petty cash at the end of the year? So assume the following are the unreplenished petty cash voucher as of December 31. Office supplies 300, traveling expenses local 400 with a total of 700 pesos. So the entry should be debit traveling expenses local 400 pesos, office supply expenses 300 pesos, and credit petty cash 700 pesos, and an explanation to record the unreplenished petty cash at the end of the year.